Hello guys, welcome to this beautiful video. Today I'm going to be doing an introduction to synthetic indices for those that are new to synthetic indices, or probably for those that have been trading currency but want to enter into synthetic indices. So I'm going to be doing introduction. I'm going to also be sharing my experience that I've gathered for over 3 years trading synthetic indices. I'm going to give you my honest review, and then at the end of the video I'm going to be sharing you the synthetic indices best strategy that you're going to be using for synthetic indices if you want to succeed in this synthetic indices trading game. All right guys, I have been trading synthetic indices for over 3 years now, and I can say in general that I have made massive profit with synthetic indices. I have made massive growth with synthetic indices. I learned Forex 3 years ago, and my mentor in Forex trading was a currency trader back then. He was also a currency trader, but he also trades synthetic indices. Then he introduced me to synthetic indices, and then introduced me to his broker, which is Deriv, which I've been using these guys for over 3 years now. These guys are 25 years old. They are 25 years old in Forex trading. They have currently currency and synthetic indices, and their spread is mad. Their spread is mad. If you don't really know how to choose good broker, Deriv is the best broker, because their spread is mad. With your $15 account, you can move a $15 to roughly $200. I want to be realistic here. So guys, I have made massive money. I have flipped $15 to $100. I have flipped $50 to $1,000, and I currently have flipped $300 to $6,000 trading synthetic indices. Is highly profitable than the currency market, and the currency market has so many limitations, like the news. You can be trading now, and if you don't know how to read news, and spike will just come up with news. But synthetic indices does not have such kind of limitation. Synthetic indices run 24 hours, no weekend break. Currency does not run 24 hours. So that is how it works. All right guys, if you are new to synthetic indices, what is synthetic indices? If you're hearing synthetic indices are unique indices that mimic real world markets volatility and liquidity risks, which are often seen in other financial markets. They are available for trading 24 hours. Synthetic indices are not real indices. They are not real trading. They are like their market. They are artificial market that mimic the real world market, but they behave the same. They can also be easily manipulated. So you have to know that as well. Since they're not real world market, they can easily be manipulated. Yeah, but if you understand the strategy of trading synthetic indices, you can also succeed in trading synthetic indices. They are not affected by news. They are not affected by time. You can trade it anytime, 24 hours. Anytime you enter your chart, synthetic indices is available for you to trade. So before we go over to our chart explaining each of the synthetic indices pair, let me quickly do a little bit tell you why the advantage of trading synthetic indices. Synthetic indices are available. They have high leverage. And tight spread. You can trade synthetic indices round the clock, which I already explained. They are not affected by world events, which I already explained. You don't need to read any news about you don't need to download any software to read news for you. So synthetic indices are free of news. Synthetic indices are generated randomly and also audited for fairness by an independent source. That's why I said it can also be manipulated. Over far back when I was trading synthetic indices, only 3 years ago, we used to believe that Deriv used to manipulate the chart, which is very, very true. Deriv used to manipulate the chart. Sometimes you are buying, you're on a very deep buy, and the market will just tumble, trap both the buyers and the sellers. That was when I never developed strategy, but now I have the strategy that works for synthetic indices. I've back tested a whole lot of stuffs. Which I'm going to be sharing. Just watch to the end. You will see my strategy, which I'm going to be showing you guys quickly very soon. So they are not subject to manipulation. So guys, they are subject to manipulation. This is my own review. They are subject to manipulations. All right, guys, without saying much, let me quickly go over to the chart and show you, do a brief introduction about all the synthetic indices pair. All right, guys. So synthetic indices, which is the trading synthetic indices with Deriv, they were the first broker that were actually offering synthetic indices. Now we have other brokers that have actually come up here to trade synthetic indices. So if you want a reliable broker for synthetic indices, I will advise you use Deriv. I said earlier, they are over 25 years old, and they currently have so many platforms where you can trade synthetic indices. And one of the platforms, they are also available on MT5. Yes, just only MT5, and they also have the trading view if you are using your computer to trade them. So how do you get their derived trading view? It's very easy. Just come over to your Google search engine and then click on the Deriv, then remove the .com, just click on Deriv, and then you scroll down, you see the trading view. Once you click it, it will bring you to this portal. There are several synthetic indices pair which is available on synthetic indices, and the first pair we're going to be reviewing right here is the Boom 1000. The Boom 1000, and I'm going to be sharing secrets for the Boom 1000. So whenever you hear 1000, the first thing that should come into your head is a buy. Yes, whenever sell, I'm giving you my advice as a professional synthetic indices trader. I've flipped accounts. So many companies has brought account for me to flip, and I flipped that. I think the recent one was the one they brought a $30,000 account for me to flip to 60K, which I did that in a space of 1 month. So I can't do that with currency. You get, currency will take me more time. So now, Boom 1000 right here, Boom 1000, the first thing that should come into your mind is a buy. Because whether it is buying or is selling, it's going to spike up. It must always spike up. You can see it was selling here and then it spiked up. It was selling here, it spiked up. It was selling here, it spiked up. So I always advise you to create a setup that will going to give you a buy setup which will align to the general trend of Boom 1000. Boom 1000, Boom 500, they operate the same, they operate similarly. So now you can see it was selling right here and then it spiked up, selling right here, it spiked up, selling right here, it spiked up. So when you are creating a setup, it's always advisable to create a setup that will give you a buy setup that will align with what Boom 1000 or Boom 500 is currently doing. Then the next one you're going to be checking right here is Boom 500. They behave the same. So they currently behave the same. You can see, no matter how much the market is selling, it must always spike up. So this green candles, heavy candles you're seeing here, is called spike. So boom and crash are known for spiking. So the next one I'm going to be reviewing here is crash. So the crash 1000 and the crash 500 is similar. So each time you hear crash, the first thing that should be coming to your mind is a sell. It must always sell. So whether the trend is upward, it must always spike. You can see this heavy red candles you're seeing here is called spike, and this is what is called selling for me. It's selling. It must always sell, no matter how much the market is buying. You can see, no matter how long. So yeah, in crash and boom, what is very most important is to know when it's going to spike. Is to catch the spike. If you sit near a derived traders that are trading crash and boom, what you usually hear is, I want to catch spike. I want to catch a spike, because that is what mostly crash and boom are always doing. So without wasting much time, the next instrument I'll be reviewing here is the volatility, which is very popular, very popular. The volatility is very plenty. We have the volatility 10, volatility 10 first series, the volatility 10 index, the volatility 25 index, the volatility 25 index, the volatility 50 first, the volatility 50 index. So I'm not going to be reviewing all of them one by one because they behave the same, they behave similarly, but I'm going to be reviewing them from here, and then finally I will major on the volatility 75 index and the 75 first series. That is where I'll drop my 10s. So the volatility 10 is highly volatile than the volatility 10 first series. This first you're seeing here is first called first series, is highly very volatile than the volatility 10. So, and their lot size is different. So I will advise you to always back test them and check the lot size, which is good before you start trading them. It's always good to back test them with a demo account before you start going live. So volatility 25 first series is highly volatile to compare to the volatility 25. Then the volatility first series is highly volatile to compare to the volatility 50, and the volatility 75 first series is also very highly volatile to compare to the volatility 75. And over the years, when I started trading 3 years ago, it was just volatility 75 that was here, and volatility 50 was there, 50 first series was there, 25 first series was there, 25 was there, 10 index was there, 10 first series was there. So this volatility 75 first was not there, so they just introduced it recently, which is really profitable, highly profitable. So guys, if you're not trading this volatility first series, do well to go and trade it. It's highly profitable, guys. So I'm going to be opening volatility first series and explaining one or two things for you. So volatility, this is how the chart looks like in 1 minute. Okay guys, what I never mentioned is if you want to succeed in volatility, crash, boom, and the rest, you need to trade them in the small time frame, with a small time frame, because this pair is not currency. This pair is highly volatile. 0.1 is very aggressive, as if you are using 1.00 in currency. Is highly volatile, so it's usually very good to trade it with 1 minute. And imagine you catch a trend from here, with 0.01. From here to here, has a tendency of giving you close to $500. Yes, if this pair. But in currency, from here to here can even give you $1 with 0.01. You guys, so the volatility is very synthetic indices in general is very volatile. So now synthetic, when it comes to trading synthetic indices in general, the pattern, the strategy in trading this synthetic indices is quite different from the way you trade currency. The confirmations you use in trading synthetic indices is different from the confirmation you use in trading the currency. The currency market, you can easily use your moving average, but in the synthetic indices, you don't use your moving average. There are things that you need to use, which will give you a 99% high winning rate, which is what I'm going to be sharing if you keep watching this video. So the currency, this volatility, all the volatility pairs are just similar to the normal currency chart. You can see as similar to the normal currency chart. All you need to do is just to take note of the trend, and then when we go over to the strategy, I'm going to be teaching you what you need to be looking out for. So you can see how it looks like. All you need to do is for you to identify the trend. 3 years ago, this particular pair made me a millionaire. It's 3 years ago. This is a particular pair that actually upgraded my level to the level I am currently. today. You get, so this pair really did magic for me, and I measured and I focused on this pair. So imagine just measuring and focusing on one pair is highly profitable. I watched some video where some traders were saying trade here, it's good to be trading everything so that in case one pair lose liquidity. No. That is a wrong trading advice, guys. If you want to succeed in this game, just major in one. If you're trading currency, focus on one. You can focus on GPUSD like me. If I trade both currency and synthetic indices. If I go over to my currency, I just major only on GPUSD. I don't GPUSD and EURUSD and overall GPUSD. I measure on just GPUSD alone. So if I'm trading synthetic indices, I measure on only volatility 75 first series now. Currently, I don't trade 50 again because it's highly manipulative now. So, and it pays more than, it's highly volatile, more than 75 first series. So that's for volatility 50. Volatility 75 is also the same thing. It's also the same thing, the same chart. There's no difference. You can see. All right, guys, without wasting much time, because I don't want this video to be too long, let me quickly show you the strategies. Let me quickly share the strategies you can be using for you should be using for synthetic indices if you want to succeed. So as I said earlier, that you cannot just be using normal conflicts, normal confirmation, normal support and resistance, normal pattern you use in trading currency to trade stock. If you try it, you to wipe your entire account. You get, so there are strategies which you need to be learning, which you need to use. And the number one strategy you need to learn where if you want to succeed in trading synthetic indices is the head and shoulder pattern. The head and shoulder pattern. I'm going to list them and then I'm going to go over to the chart and show you what I mean by head and shoulder pattern. So if you can spot your head and shoulder pattern on any derived pair, whether the crash, the boom, or the volatility itself, you will succeed. The next thing, if you can spot the the head and shoulder pattern, also have the inverse head and shoulder pattern. The next strategy you need to take note of is the double bottom. Yes, it's also available on the currency as well too. So double bottom is a very strong very strong reversal pattern. So whether you're using ICT strategy, if you have, for instance, you draw your order block and the rest, and then you see a head and shoulder pattern, then you ignore it, to wipe your entire account. So the next thing is the cup and handle. The cup and handle, I don't use this one. So the rounding top, I don't also use this one. The one I use here is ascending triangle. Yes, it's very popular as well too. Also in the currency, the ascending triangle and the descending triangles. These are these strategies are very common and highly productive when you are trading synthetic indices. And the most common ones, guys, the one I use always is the head and shoulder pattern and the double bottom. These ones occur regularly, frequently, most especially the head and the shoulder pattern. Let me quickly show you how head and shoulder pattern looks like in this chart. So you can literally be using head and shoulder pattern without even any, of course you can add confirmation. So another strategy I did not listed is the M strategy. The M or the W. For instance, now if you see the M on crash 1000 is highly productive, because you can see how this count is coming down, right? This is how volatile this pair is. So you can also look for the W. And also look for the W. Now this is an M. I'm going to be dropping a video that will talks more about Deriv strategy. I'm going to be dropping a concise, well detailed video that talks about Deriv strategy. Let me quickly turn this to a light mode. So I'm working on that video. Once it's ready, I'm going to share it. That video, I'm going to be sharing all my strategy, including the pin bar strategy, which I use in trading synthetic indices. I use that strategy to move a $1,000 to a $10,000. Yes, yeah, it was an investment account, right? Yeah, so this is what you need to look out for. You can see this is what you need to look out for. This is an M, and after you got an M, sorry about that, let me draw it properly for you. This is 1 minute too. This is 1 minute time frame. So after you got an M, if you got a half M, once you see this forming, once you go to the half one, the next thing is to, once you enter your entry here, next thing you'll be on a very deep sell, and with a good loss size from here. Of course, you have to follow proper risk management. So with a good loss size, you can make it from year to year. You can grow your, let's say, your $19 to $100 or to $200 from year to year. Yes. So next, let me show you the head and shoulder pattern, which I'm going to make in a video about head and shoulder pattern. So also, for you to even see most of these patterns, you have to zoom down. Okay, I've seen one. I also mostly use this strategy to trade currency as well, like my GPUSD. This is the head, this is the shoulder, this is the left shoulder, this is the right shoulder, and after then this is what the market did. After hitting here, touch here, forming the head, come down, form another shoulder, right shoulder, and then look at what market did in 1 minute time frame. So guys, I have been using this strategy for over how many years now? These are one of the most common strategy: head and shoulder pattern, and double bottom, and the M and the W pattern. So once you see any of this in the chart, so, and the best strategy that works in trading synthetic indices is the price action strategy, just using your naked eyes to just see charts. If you want to start adding indicators, you lose your money. You will lose your money in indicators. So talking about indicators, guys, I have a perfect indicator which I customized and created for entry. Let me show you guys that indicator. So this is the perfect indicator I created, guys. This indicator is super. Like, I've sold it to guys in South Africa, I've sold it to guys in South Africa, in Nigeria, and they are currently using it and they are making massive money with this indicator. So you can install it on your in your system and it will be working so perfectly. This indicator indicates your support and resistance. So if you're a support and resistance trader, this indicator is for you. This indicator will give you entry. It will give you entry. This indicator will also give you signal. So if I turn on the volume of this indicator now, you'll be hearing some signals in the 1 minute time frame. So you can see it literally giving me a buy and sell. You can see from this area here, it gave me a sell, and let's say I enter this trade. I was not teaching from the 5 minutes. You can scalp with this indicator. So it gave me a sell, and then currently I'm selling. You can see from year to year can make you good money. So if you're interested in this indicator, I will send you this indicator via email once you make payments. So it's very easy to install. The installation is very easy. So let's say this is all of the indicators I sent to somebody. So the person I think is living in Europe. Yes, Europe. Yeah, I sent this indicator via email after he made purchase. So you can also buy this indicator from my Telegram channel as well too. So let's say you just finish downloading any of this indicator. Let me show you what I mean. You just download this. Once you download it, once you click double tap on it, it brings you straight to your MT5 chart. So you're going to be downloading the MT5 chart as well too. the Deriv MT5 chart. I have a video that talks about how you can download the Deriv MT5 chart, so go and watch that video where I talked about downloading the software, the robots. Yeah, so watch that video about robots. It will show you how to download the Deriv MT5. Yeah, the Deriv MT5 itself. So once you download it, once you double tap, it will automatically comes in your chart. For let me show you an instance. You can see here we have the share spike 4, right? Share spike 4. So you come over to the chart, share spike 4. You can see it's share spike 4. So how do you add it? Let me remove it first. So all you need to do is just to drag it, just almost the same way you install your robot. Drag it and click on OK, and then it will be giving you a signal. So it has also a default alarm, which I've already mentioned. It gives signal, like it rings. You get. So I don't want to turn on the video the volume so it will not interrupt this video. So if you're interested in this software, just let me know in the comment section, and then I will tell you how you can get the software. All right, guys, so this is how you trade the Deriv. So I'm going to be making a video. If you want to watch, if you want to develop your strategy, develop your trading skill, trading strategy, so do well to watch this video. I'm going to be linking up here or here, so do well to watch that video. If you find value in this video, ensure you hit the subscribe button, turn on the notification bell. All right, guys, that's all for today. Peace out.